Hi guys, it's Omer from MMOs.com. I'm going to do another video in the Financial Look series, this time for Nintendo. A company that probably needs a little introduction, but I'll give you one anyway. They make video games. Before we get started, I do want to make a quick disclosure. I do own stock in Nintendo. I do believe the company's value will increase in the near future. Maybe by the end of this presentation, you might think so as well. But anyway, for now, let's take a deep dive at Nintendo and see what the company looks like underneath. Some key stats for the company. They're worth about 5,119 billion Japanese yen, which translates into 45 billion US dollars. That's 5.1 trillion yen. I do want to convert everything to US dollars for you because yen just makes it more confusing. They're obviously based in Japan, so the numbers are reported in yens. And for some comparison's sake, Sony's worth about 50 billion, Activision Blizzard's 46 billion, EA 34, and so forth. Sometimes these numbers are hard to visualize without context, so there's some context down there for you. Total sales in the last 12 months for Nintendo, about $5 billion. And the price of sales is about 8.88, and that just means the value of the company in relation to their sales. You multiply the 5 billion in sales by 8.88, you get the value of the company. So the market is valuing Nintendo at 8.8 times their yearly sales. And for comparison's sake, Square Enix is at 1.75 times price of sales, EA is about 3.19, and Activision is at 6.57. So people are valuing Nintendo higher in relation to their sales than other companies, and this typically happens when people think the growth at Nintendo or the growth of this company will be quite a bit higher than their competitors. So Square Enix is trading a very low price of sales. People are not expecting great growth out of them on their top line, and Nintendo is expected to grow quite a bit more. On net income, on the other hand, is their profits. They made about $1 billion in profits over the last 12 months, a good chunk of change. And you can see actually in the bottom left over there, the price to earnings ratio is about 42.31. So you're paying about 42 times Nintendo's yearly profit. So if you were to buy the company, you have to wait 42 years to get paid back, assuming they have no growth and we just keep getting last year's numbers over and over again. That's what the number means. 42 is pretty high, actually. If you look at the average of all the stocks in the Japanese index, the Japanese Nikkei index, it's about 18. So typically when you buy a company or you invest in a company, you pay 18 times the yearly earnings for the entire company. But Nintendo's traded quite a bit more, namely because people expect big numbers out of them. But anyway, why Nintendo's misunderstood? Nintendo gets shit on a lot. I've noticed this amongst the gamer community for a long time. People don't respect Nintendo a lot, and Wii U was actually quite a bit of a disaster as well. So maybe that's why. But even before that, people never take Nintendo very seriously. And I've always heard silly things like, oh, Nintendo will go bankrupt, Sony's going to kill them, Microsoft will kill them. But I think it shows a bit of a lack of understanding about the financials behind Nintendo. These headlines are both correct. Nintendo did lose a lot of money in that quarter. $232 million loss in Q1. Those are big numbers. And here's a big nonsense headline, the most nonsense headline I've seen in a while. Nintendo might go bankrupt if the Nintendo Switch fails. I forgot what website this was on, but this was in 2017. This is terribly untrue. And MobiPicker, there you go. Don't trust MobiPicker, guys. They suck. Anyway, you can see the company's stock performance. And despite the reporting these negative sales in 2014, the company's stock actually continued to march higher. So investors, brushed off the fact that they lost money that year. And, the Wii U wasn't a big success, but the stock price actually went up over the years anyway. But let's look at the reality of the situation. So the worst year in 5 years is equal to about $204 million in loss for the whole year. And you can see that number reflected on the company's income statement. And this just shows you what their sales were, how much it cost to make those sales, and the yearly profit, which is at the bottom. So 2014, fiscal year 2014 down there, it shows minus this 23,202 number, which is in millions of yen. They lost $204 million. And it sounds like a lot of money for Nintendo, but it's really not when you think about it, because the company's worth $45 billion. A company worth $45 billion losing $204 million is really chump change, but that's just the value of the company. We have to look at the actual assets of the company next. So we can look at the flip side of the income statement. I would look at as the balance sheet. Basically, the income statement shows you, again, how much money they make, what their profits are, whereas the balance sheet shows you how much assets they have, how much cash they have in the bank, how many buildings they own, what buildings they own, and stuff like that, what the assets of the company are. And you can see on this side, the total current assets are right about 10.1 billion, reported in millions of dollars. Total assets of 13 billion. You can see total assets at the bottom over there. But we're going to focus on the current assets for now, because if you look at the total assets, it counts stuff like intellectual property, buildings, equipment, computers, furniture, all that stuff. For now, we're going to focus on cold, hard cash. Best way to look at current assets is basically cash. It actually lists out the assets over here. You're counting cash and deposits, notes and accounts receivable, securities, inventories, and whatnot. Basically, these are just things that are easily converted to cash. So they have about $10.1 billion of cash, which is absolutely incredible. So let's look at the debt they have as well. So these are just the assets on the balance sheet. Equally important are the liabilities or the debt. So you have about $10.1 billion of current assets, again, mostly cash. Total debt for the company is only $1.9 billion. So you have a company with $10.1 billion in cash and only $1.9 billion in total debt. So Nintendo can pay off all of their debt today and have $8.1 billion left in the bank. That's after paying off everything they owe. So that's a lot of cash, and they have no debt. So a company that has $8 billion in cash, and the worst year they had in 5 years was a $200 million loss, they could operate for 40 years with the worst in 5 years and still not be bankrupt. So the headline about them going bankrupt was absolute nonsense. Nintendo Switch could absolutely flop, and it would be, it wouldn't really dent Nintendo's balance sheet. But that's beyond the point. Let's keep going for now. You can see the revenue and what's selling for them. So you can see these numbers over here. The red line is, of course, the Switch. It just launched. You can see previous console sales over here. But I do want to focus on the Switch because it is their latest product, latest and greatest. The hardware sales right now are 2.74 million, and they're projecting it out to be 13 million sales by the end of the fiscal year. That's actually pretty incredible because if you look at the Wii U, again, considered a bit of a flop, it only sold 13.56 million units over its 4-year life, the last 4 years, which is, again, Nintendo Switch will basically outsell the Wii U in 1 year and what Wii U sold in 4 years. So Nintendo Switch is off to an incredible start. So Nintendo's currently killing it with their console releases and their console games, as well as the DS has always been killing it for a long time. Look at previous consoles as well. You can see all the sales of previous consoles. Hardware sales for the Wii were the best ever. They sold 101 million. Pretty incredible for a traditional console. And the cool thing about this is even though these don't really make any more money, they can actually re-release these consoles like the NES Classic or the SNES Classic, and they can make incremental revenue on that as well. So that's pretty cool too. Plus they can always re-release older games as well, which is a big money potential for Nintendo. So let's recap again where we are right now. Nintendo's worth about $45 billion. So imagine you bought the whole company for $45 billion. You're some rich dude. What does that $45 billion get you? You get a company with a net cash of $8.1 billion. So you're really only paying $37 billion. You buy something for 45, and he's got $8.1 billion in the bank after paying off all debts. You really only paid 37 at that point anyway. A company with sales of $5 billion a year and growing. A company with profits of $1 billion a year and huge potential for growth. These are just my opinions. A company projecting strong Switch sales, 13 million by the end of the year, and possibly 110 million lifetime sales are the projections right now by analysts and the company. So they could potentially outsell the Wii with Nintendo Switch. That's what they're predicting. This alone isn't enough though. Nintendo actually looks very expensive. Remember, you're buying the company for 42 times their earnings and 8.8 times price to sales. That's actually really expensive, especially when you look at the broader market as a whole. You saw you get Square Enix for like 1.75 price to sales, and all those companies you could get for, you're paying a smaller multiple for the yearly incomes. And actually, if you look at the Japanese market as a whole, all the big companies in Japan, through their index, typically a giant Japanese company can be bought for about 18 times yearly profits. So why are people paying 42 times yearly profits for Nintendo? They're expecting some incredible growth. So this alone doesn't really tell the whole story. We have to look at the massive untapped mobile potential. You guys heard me talk a lot about this in the podcast in the past. The company currently makes about $200 million a year off mobile, thanks to Fire Emblem Heroes, Super Mario Run, and Pokemon Go. Now, Pokemon Go, which is owned by Niantic, not Nintendo, they own a very small piece of that, did about $1 billion in revenue in 2016. All of Nintendo, counting all of the hardware sales, all the software sales from the Switch, 3DS, DS, and all the games, only did $5 billion in total sales. But then you have this mobile game called Pokemon Go that did $1 billion by itself. Mobile is currently only 5% of current revenue for Nintendo, and this one mobile game that Niantic made is making this crazy amount of money, and not even a great mobile game. I played it quite a bit. I didn't really like it. So that's absolutely incredible that, if Nintendo owned it outright, their sales would be 20% higher this year than it currently was. Legendary portfolio franchise/IP, and this is why I'm really optimistic on Nintendo. They own some amazing franchises, namely Mario, Pokemon, Donkey Kong, Metroid, Star Fox, Kirby, Animal Crossing, Pikmin, Fire Emblem, just to name just a few. Best portfolio of gaming franchises, hardcore loyalty, and global reach. I think Nintendo has the best brands ever out of any video game company. I think Final Fantasy is a great brand too, but that's like one brand. I know Square Enix has Dragon Quest and a few other names as well, but nothing is quite as legendary as the franchise Nintendo owns. Mobile Pokemon games like standalone smartphone or one-time buys with gacha games. Just imagine a game like Fate Grand Order. I believe that makes close to $1 billion a year as well. You can literally have that exact game, or any of the waifu collector games or the hero collector games, but with Pokemon, and that would literally mint money for Nintendo. I think that's one of the reasons why people are valuing Nintendo higher, is because they know that the mobile potential is there. It's absolutely incredible what Nintendo can do with mobile. And just look at the recent games they sold on 3DS, Wii U, and Nintendo Switch. This is just over the last year. These are all basically million-selling games. That sold 1 million copies. This sold, 15 million copies. It's even like these games have such sticking power. You know, we've had Mario Kart 7. We're on Mario Party like 9 or 10 by now. You know, these games, they stick around for a long time. Kirby's been around for a long time. Nintendo's franchises have staying power. They have nostalgia value as well. Legend of Zelda. You know, despite these franchises being really old, they still sell really well, which is why they can transition to mobile, I think, really effectively. And here's my main point about why I think Nintendo is an amazing investment and why they're going to keep growing. Currently, Nintendo is basically competing in this market over here, the console market, where they're going for 32% of the addressable gaming market. I know it's 2016, we're actually in 2017, so it's actually 31% right now. Nintendo's competing for this slice of the gaming market, 31% of this $108 billion number. But they're ignoring basically everything else. And let's look at 2020, when they start competing more in mobile. They're already in mobile right now, but they just started. They just started dipping their toes in water for mobile gaming. And by 2020, I think they're aiming for like 3 to 4 mobile releases every single year. So by then, they're going to have like 15, 20 mobile games, if not more. They're going to be having a 78% addressable market. You're going to add up 20%, 10%, and 40%. 40% is for mobile, 10 is tablets, and 20% for console. So Nintendo will go from addressing 32% of the market with their offerings to 78%. That's more than double. And I think and what's remarkable is I think in mobile they will be very competitive because their franchises are so memorable. I mean, a mobile Pokemon game would just literally mint money. Pokemon Go is minting money, despite being, I would argue, a substandard, pretty meh game. So they're going to be getting a bigger piece of a bigger pie in the future. Obviously, there are risks to this thesis. You know, there's no such thing as nothing is really obvious, and you can always lose money when you're investing. Big risks include that Nintendo is a large company. Large companies are typically not quick to adapt or being flexible, and the fact that Nintendo has ignored the mobile market until just recently proves this theory. And what's even more interesting is actually Nintendo doesn't actually self-develop their mobile games. They partner with a company called DeNA, which actually made Miitomo, Super Mario Run, and Fire Emblem Heroes. The fact that Nintendo does not develop these games in-house shows incompetence and a lack of focus, in my opinion. I mean, Nintendo is not a small company. They're a $45 billion company. Why on earth can't they make their own games? They're relying on a third party to play with their franchise. They're letting somebody else make a game with their baby, with Super Mario and Fire Emblem Heroes. I mean, Nintendo can easily hire their own staff of mobile developers and do it. And why are they? And not only that, when they partner with DeNA, they're actually giving a slice of revenues and a slice of the profits to DeNA as well. So they actually make less money when they do this. And it's just insane for such a giant company to not be vertically integrated, to not have the development in-house for their own games, which I think is absolutely nuts. But at least the fact that they're on the mobile bandwagon now. It took a long time. I want to see them make the games themselves, though. Whether hire their own developers, make it happen. Other risks continued. If Nintendo fails to launch hit mobile games, the stock price will fall. The console, as I said earlier, the console business does not come close to justifying today's stock price. It's a $45 billion company today already. And as I said earlier, the average stock in Japan trades about 18 times profits versus 45 for Nintendo. And in order to make today's numbers work, the company needs to grow. And for the stock price to go up, it has to grow even faster. Personally, though, I do think for sure the company will do really well. Not for sure, obviously, nothing's for sure. But again, you can't emphasize enough just how much bigger the addressable market will be in the future when they start making more smartphone games. I mean, look at the top mobile games today. You have games like all the waifu collectors, all the hero collectors, and there's no reason Nintendo can't compete with that market. I mean, a Pokemon hero collector, I think, will literally dominate the market. Like, why? Like, Fate Grand Order, like, I get it's a fun game, but like those, I can collect King Arthur, I can collect all these waifus from the show, but like Pokemon, I think, has much more connection with gamers, with people. So I think a Pokemon hero collector would do remarkable. Even a standalone Pokemon game on mobile would be amazing. Just make the same exact games they make for DS and for handheld on mobile, and it would sell like hotcakes. I mean, mobile is just a huge market, as you can see. It's mobile is going to be bigger than is much bigger than console in 2020. Even today, it's basically bigger. Yeah, 2017, mobile is bigger. If you count tablets, it's huge. It's actually more than the entire market of it. 50% of the entire gaming market will be mobile and smartphone. Poor PC is pretty small. And now, again, not only that, too, they're unbelievably conservative too. So it's a company that doesn't take a lot of risk. They have so much cash in the balance sheet. They can afford to be slow. They can afford to lose money on certain things and not make, and they can lose money for the next few years, and it's no big deal as long as they're expanding their mobile portfolio. So it's a company that's not really at risk of bankruptcy. If the company does not execute, though, obviously the stock price will decrease. But you don't risk the company going bankrupt the next few years. It's almost impossible for Nintendo to go bankrupt anytime soon, unless they literally start burning their money. Because again, the worst year in 5 years was $200 million. They have $8.1 billion left after paying off all their debts. That's they can operate for 40 years at those horrible numbers they have to. But more importantly, they're making money today. But yeah, I'm an investor in Nintendo. I've made a decent chunk of money already, and I think they'll keep going up. Now, I'm very optimistic about Nintendo's mobile franchises. They're going to start minting money. They will absolutely kill it. Realistically, I think in the next 3 years or so, personally, I think Nintendo could be valued at 90 billion, 100 billion. Obviously, this is my estimates, just my guesses. Obviously, investing comes with risk, obviously. But yeah, that's my financial look at Nintendo. I want to keep it very broad. I didn't want to get too detailed about the balance sheet, though. There's a lot more that goes into these investments than just reading the investor presentations and the balance sheets, but you got to read the annual reports, understand what's going on. But I'm a big believer in both Square Enix and Nintendo. And interestingly enough, even though I think Nintendo has unbelievable potential, Square Enix is a much smaller company. For Nintendo to double, they would have to go from 45 billion to 90 billion. Whereas for Square Enix, it's much easier for them to double. They're like at 3.5 billion. So if they have 1 or 2 hit games, they can double or triple. Versus Nintendo needs like multiple hit games to move the needle. You know, let's say they make a mobile Pokemon game at $1 billion a year revenue. I mean, it's good, but when the company's worth 45 billion, it's not going to move the needle that much. Whereas for Square Enix, it would be unbelievable, and the company would double or triple very quickly on 1 or 2 mobile successes. So Nintendo has to make more mobile successes and got to make more hit games. So while Square Enix has more potential, I would say actually Nintendo is less risky because they have so much more cash and they have so many epic franchises. But yeah, that's my financial look at Nintendo, and there it is. I think it's a great company. Later, guys.